So that a brief look at the way things played out yesterday, but things really seeming to be slowing down here with very little news flow to effect. How are you reading market activity?
Hi, Alicia. Market activities obviously have slowed significantly, and the challenge for the Nigerian market right now is there is no new information coming out from any of the major corporates until the new year. So investors are basically reacting more to information from previous numbers. I think that what we're going to continue to see is the market trading sideways to lower till the end of the year as investors continue to rebalance their portfolios ahead of the year ahead. The reality at the end of the day is that from a sector point of view, the banks continue to remain very relevant, and until we see significant improvements in the numbers from the banks, we'll continue to see the market trade sideways.
Well, as the year wraps up, we slowly have macro issues coming to the fore with budgets and elections, particularly in focus. What's your perspective on that broader economic picture right now?
At the macro level, there's quite a lot of activity. You know, the challenge we've always had is that if you look at GDP growth numbers, there's a debate that's been going on in the country for the last week, saying that we're having 7% GDP growth perhaps for almost 2-3 years now on the average. But the average Nigerian isn't feeling that growth simply because the informal market continues to remain the most relevant. At the end of the day, stronger oil prices hasn't exactly meant us being able to keep reserve numbers at the pre-2010 levels. The micro level as well, at the micro level, inflation continues to remain a concern. And this is basically what I've always warned about from middle of last year, that we were probably going to get into a period where, you know, growth will be strong. However, at the micro level, the filter through will still continue to remain very, very slow. What I expect will happen in the first quarter of next year, for example, is there's going to be a lot of activities around electioneering. There will be a lot of liquidity in the system, but don't expect that liquidity to do anything to growth. I think that as we get clearer in terms of who the candidates from each of the parties will be, we'll be able to see what economic directions we should be going towards. A lot of the candidates have started to make some statements about their political direction. However, I think we strongly believe that Nigeria isn't going to fundamentally change its approach to economic management because the fundamentals are very clear. So we still continue to see the sort of tax regimes that we have now, see the same type of economic policies that we have at the moment, irrespective of whoever is president. Yeah. And that will continue to mean that corporates will provide the biggest direction for the market.
Well, Femi, it's within this context that we've got Nigeria planning a roadshow to the U.S. next week, where the book run is off for its $500 million debut Eurobond. We've got reports saying that it's on track to complete that issue before the end of the year on the one hand, but on the other hand, there's increasing concern over Nigeria's high government spending and falling reserves ahead of elections, as I highlighted earlier. What are you making of government's timing right now in issuance of this bond?
I think that the timing is in itself an imposed one, and probably self-imposed as well. The reality at the end of the day is that government needs to do something about establishing a curve for the Nigerian debt market internationally. I think that the concerns being expressed by the international market are somewhat valid. However, when you look at the size of this Eurobond offering relative to the size of the Nigerian economy, relative to the size of our reserves at the moment, it makes you feel that some of those concerns might be misplaced. I believe that this roadshow would clear out quite a lot of those issues. We still have oil prices at $90, which is, you know, $40 or about $35 higher than was budgeted by government. That is a major development in the economy that no one is probably talking about at the moment. And we still are able to sustain production above 2 million barrels, which is also very good. So I think that for the Nigerian economy, fundamentally, the underlying strengths of the economy are still there. We still continue to remain concerned about government spending, especially at the recurrent level. And it is clear that the central bank and the Minister of Finance have also raised those concerns, saying that, look, in 2011, we can't continue to spend recurrent expenditure like the world is, like there's no tomorrow. So I think that government realizes that there is a problem with spending. And if you look at the level of debate that has started to generate, that has been generated from this particular development, it means that something will be done about it, which for me remains perhaps one of the most positive developments of 2010.